We have Sudip Bandyopadhyay joining us on the show as well. Sudip, I wanted to begin by discussing Horsa Consumer. The stock had suddenly gone from levels of 330 thereabouts to 420, 430 plus. And now again, it's been retracing on account of the supply pressure coming in. How should a retail investor look at this entire space right now?
Well, I think, NASA specifically, I would say that, there was a bit of an euphoria when the prices started going up. There was a brokerage report which pegged the price at a much higher level. And I think that started the, excitement in the counter post-listing. There was a lot of buying in that counter. But as far as, the fundamentals are concerned, I would say that they're yet to prove, their strength on non-Mama-Earth products. And that's where I think the report also was talking about game-changing growth as far as the non-Mama-Earth products are concerned. And of course they're talking about retail, online, non-online channels and things like that. But I think all these are in the future and all these are not proven yet. So under the circumstances, I will refrain from advising people to buy into Horsa Consumer. Of course, today's fall is on the back of supply pressure. And for a new listing, these kind of pressures once in a while do come when the lock-in periods keep getting over for multiple classes of shareholders.
Right. But, aside of that, Sudip, looking at the kind of IPO subscriptions that we've seen off late for a series of IPOs, do you think the FOMO feeling is most evident there?
Of course, Aisha, there is a FOMO feeling. When you apply for an IPO which gets subscribed 30, 40 times and you end of the day, you don't get any allotment. And there is a lot of memes going around which is talking about this phenomena. And of course, there is a FOMO feeling and people do apply. And beyond that, I would say some of these IPOs are excellent companies with great potential for the long term. And they do deserve some of the valuation and much better compared to what value they came in the market at. And we are seeing that getting displayed in the market post-listing. So fundamentally, there is no problem in more IPOs coming. And fundamentally, I would say it's very good for Indian market. It increases the depth of the market by increasing the number of good quality stocks which are in the listed universe. The choice becomes much larger. Some of the interesting companies are also coming, which probably were not, companies from those sectors were not there in the market earlier. And I would say this is a very healthy trend. Now, also I must say that there is enough and more liquidity in the market, both domestic as well as international. So if good quality stocks, companies come for an IPO at a right price, I think there will be enough and more subscribers.
Building materials and cement?
Well, extremely positive. In fact, the way the infra spending is happening, the way the infrastructure spending is expected to happen, both private construction as well as public construction is increasing. Also, the housing, is an area of focus. We know real estate has been doing very well, both commercial and retail. So, under the circumstances, the demand for cement as well as building materials is definitely going to keep going up. And efficient companies in this space will definitely benefit. So from a cement perspective, Ultratech has been a favorite for a long time, and I continue to maintain my view. The Kesoram, the cement business acquisition again is a definite positive for Ultratech. There are other cement companies also, in the mid cap and small cap universe, which are A, doing well, and B, can be target of some corporate action which can lead to unlocking of value from a shareholder's perspective. Other building materials also, whether it's a ply, whether it's a sanitary ware, whether it's wires and cables, whether it's pipes, I think all these are sectors and areas where one should look at for the next 2-3 year kind of a horizon.
But Sudip, at the same time, given the kind of market move that one is currently seeing, given how solid the year has turned out for mid and small caps, anywhere you think at least taking partial profits off the table would be sensible?
Well, as far as mid cap and small cap is concerned, the only area where partial profit taking, to my mind, can be looked at is in the mid cap IT companies. I think there was a significant rally in midcap IT. Some bit of correction we are seeing now, and some more correction can be seen going forward. So there one can look at booking some profit. The other space where I think some amount of profit booking is par for the course is defense. Yes, it's a great sector. It will do well. Government's focus is on defense, make in India. But I think we have front-ended the entire rally. Whether it's a Mazgaon dock, whether it's a HAL, whether it's a BHEL, I think we have seen a massive rally. Now, these companies will definitely do well, but will the share price keep up, or we'll see a time-wise correction? To my mind, I think we'll get to see a time-wise correction, and some amount of profit booking is par for the course. And I think what you are alluding to is absolutely right. FII's money will come in a big way, and their focus will be large cap, where there are still relatively attractive value proposition.
Okay, point taken. Pull up some of the other charts as well.
Is it a pause you think that would make the street happy right now?
I think the pause will make the street happy. To expect a rate cut, I think will be unrealistic. RBI will prefer to wait and watch. The remnants of food inflation is still there, and I'm pretty confident that RBI will prefer to wait and watch. The policy, they may announce a little more benign stance, and that should enthuse the market. Actual cut, I think we'll have to wait. I think the same pretty much will be there as far as US Fed is concerned. They also will wait and watch. Somewhere the stance will start changing towards a more benign outlook.
Benign outlook, at least the common
Contra bets still in the market. Other than IT, of course, is it time now to perhaps bet big on an inversion of the K-shaped recovery that we saw play out ever since COVID? Would you now bet on, say, some of the rural recovery themes, betting on a recovery coming in anytime soon, maybe triggered by election spends?
A couple of areas, Aisha, which we're looking carefully at. For an aggressive investor, I think these will be the pockets to look at. One is specialty chemicals. It has been, down in the dumps for pretty long, and quarter on quarter they have disappointed the market. There has been enough obituaries written of specialty chemicals, but I believe that I think time is coming now to start looking at, because some of these are now really showing value. One can look at SRF, one can look at some of the other chemical companies. Even UPL from a long-term perspective can be looked at current levels. But remember, these are 1-2 year bet, not immediate. The other space which you alluded to is FMCG. Yes, rural consumption revival will probably be critical from a political point of view, also pre-election. And I do expect rural demand revival. So under the circumstances, FMCG companies which have a majority of their income coming from rural India, like an HUL or a Dabur, definitely can be looked at.
A lot of these power ancillary